I will preface this by saying we just closed a round of financing last week, so I'm a little bit sleep deprived, so hopefully this makes sense, but I think it will. So thanks for having me, guys, DevTO. So first, I think for some context, it's going to help to explain a little bit who I am. Just as a background, I went to Western Political Science, found it to be quite boring, dropped out 2 credits shy of actually finishing my degree to pursue a career in technology, and haven't looked back since. I am officially a dropout. I think that's pretty cool. I was one of the first 50 employees at Uber, which is now obviously a well-known startup, but back then it was really, really tiny. I helped to launch Toronto here and then Vancouver as well, and run both of those. And then really focus on sort of growth initiatives, especially on the demand side, so that's the rider side in that business. And then got to play a really fun role in creating stuff like On-Demand Roses, which is a promotion that we did on Valentine's Day, On-Demand Ice Cream, which is a really fun promotion we did on National Ice Cream Day. Hopefully you've all tried out these things. But and then fortunately now to be an Uber shareholder, which is really, really exciting for me as a pretty young guy. And then now my current role is as the CEO of Bitmaker Labs here in town. For those who don't know, Bitmaker Labs is Canada's first and largest coding bootcamp. We're currently offering 3 programs. So we have a full-time web development immersive program. We have 2 part-time classes. One is a front-end development class. The other is a user experience class. And yeah, we recently closed a substantial equity round from a private equity fund, which is pretty exciting news for us as a small business. And we're really looking to sort of ramp it up and increase the number of technical people here in Toronto. Ironically, speaking in front of a group of coders, I'm actually not the best coder, or I'd imagine I'm probably the weakest coder in the room. But the thing I'm really good at is getting people jobs, I'd say. At Bitmaker, we've placed hundreds of people in new careers at companies like Shopify, Hootsuite, Chango, and the list goes on. And I also spend a lot of my free time with startups, helping them through advisory roles, or mostly helping them raise money, and sort of fostering that Canadian startup ecosystem. And kind of each day, I spend a ton of time surrounded by junior devs. You know, they're looking to kickstart their career in tech. And I think I have some sort of unique insights into how to approach a career in the industry as well. And so hopefully I will impart some wisdom on you. The first is a pretty well-known quote, as is the next one, but this is from Sheryl Sandberg from Facebook these days. She was formerly VP at Google. It's one of my favorite quotes in respect to careers in the tech industry, because companies can just kind of take off like a rocket ship. So for me, when I sort of chased down an opportunity at Uber, I did sort of anything I could to get my foot in the door there. I was super flexible. I made it so there's no way they could say no to me. I moved 3,000 kilometers twice with pretty much the drop of a hat. And I quit a really good paying job prior to that, just for the opportunity to jump on what I thought was a rocket ship, and it's paid sort of dividends. So I think something that may be helpful is sort of helping people identify theirs. We all know this quote super well. This is from Mark Andreessen from Andreessen Horowitz. Software is eating the world. But what does it actually mean, and are there ways that we can sort of use this framework to help guide a career or business decisions, and sort of identify, could this help you identify an amazing company, a job, an opportunity, your next startup? So let's dig into that. So what does it really mean? Sounds super simple. But when you apply this paradigm, to big companies, retroactively, it's very easy to be like, we'll go through a few right now. Super simple ones. Google software eats direct marketing. It's now the largest direct marketing platform in the world. Netflix software eats TVs and movies, long form sort of video content. It's the largest video service in the world. LinkedIn software eats recruiting. Fastest growing recruiting company in the world, and they're disrupting a $400 billion industry, obviously a large market cap company. But it becomes a little bit more nuanced and complicated, I think, when you start working down the sort of the food chain. And I think it's a good practice to sort of look farther down that food chain. The earlier you can identify a company that has the potential to disrupt a really large industry, the better your chances of hopping on a rocket ship are, and to sort of grow with them, both in experience, in sort of financial gain, and in just an exciting career. So I'm going to walk through some companies that I think are interesting. You may have heard of some of them, you may not. So Clio is actually based in Vancouver. They're an awesome company. They've raised about $20 million to date, but they're growing like crazy, and I suspect they'll be a many hundreds of millions of dollar company within a few years. Like I said, they're based on the West Coast, and they're basically software eats legal practices. So very unsexy business, something that you probably aren't like, oh my God, I want to disrupt the legal practice industry. But very lucrative, really big market, super interesting company that's doing some awesome stuff. A personal favorite of mine that I actually almost worked for at one point, and a friend of mine runs, is called Hired.com. Very particularly interesting to this crowd. Their software eats recruiting again, but a little bit more hands-on, and a little bit more directly shaking up the recruiting industry, where LinkedIn's kind of high-level social network for the recruiting industry. This is hands-on, help you get a new job at the best rate, most transparent offer possible. So Hired holds auctions for top developer talent every couple of weeks, guaranteeing you a minimum of 8 offers in that week period. And they're in jobs at companies like Uber, Lyft, Square, you name it. They're all top-tier venture-backed companies. And to date, they've had over $3.5 billion of offers on their platform. A very exciting company that's growing at a crazy pace as well. No doubt in my mind that it'll be $1 billion company. It's probably only a couple $100 million company. So jumping on a rocket ship, even if it's a really big company today, if you think it's going to be something really big, you sort of get that percentage growth if you join at the right time. Climate Corporation, couldn't find a good logo for them, unfortunately. Is one of my absolute favorite companies, disrupting a really unsexy market in sort of the agriculture space. It's basically software eats crop insurance, and so they use big data from thousands of different sources of weather data points, and basically help farmers to insure their crops from drought, from heavy rainfall. And basically they were actually acquired for $1 billion recently, and I suspect they could have been a $10 billion company. Huge market, massive opportunity. And this is sort of where it becomes a little bit more complicated as well, working down the food chain. So I've been talking about a lot of venture-backed companies, some smaller ones that are less known probably, one local, Ship, amazing company, they're in San Fran, backed by a lot of famous investors like Tim Ferriss. They're basically tackling the first mile problem. If you know the logistics industry, it's basically the point of picking up the package from your door and getting it to the first sort of shipping point, so a mail sorting center. Basically, take a picture of your eBay power seller of an item that you want to sell. In the app, just take a picture. They come pick it up within an hour. It costs $5 flat rate to pick it up. They go ship it off at better rates than they'll ever get because they do it at volume, and that is like a $50 billion a year industry likely. Casper Sleep, really interesting. It's a bit of a stretch for this case in terms of software direct leading it, but they're shaking up the mattress industry. If you've ever bought a mattress, they can be super expensive. It's actually a huge monopoly, kind of like Warby Parker disrupting the glasses industry, where there's only 1 or 2 players that create these things. They just launched in Toronto last week. Super exciting company. And then Figure One is also here in Toronto, and they're reinventing sort of how doctors learn through anonymous visual images that they take with their phones. They share it among a network of certified and authenticated real doctors and nurses and sort of healthcare professionals, as well as some students, and then sort of knowledge share on that. So think like Instagram for doctors. Sounds really strange. Sounds really strange, but it's growing at a crazy clip, and doctors find it incredibly helpful, and it's a huge problem. Doctors are expected to be perfect, and they're far from it, and so anything that helps them with that is a hugely valuable thing. So then the other option is sort of working our way down the food chain is starting something of your own. For me, I always suggest to younger people than myself is to sort of look to the fringe, look to where is software yet to go. We mentioned agriculture, but what could be done better? Where can software take a middleman, a broker, break up a monopoly? while entrepreneurship I don't think is for everyone, I think it's good to always be thinking about ways in which software can eat an industry or solve a real problem. And I realize I'm also kind of preaching to the choir right now. But I think this one's important. So, to remember that your career is just a series of choices. So, while starting your business might be, starting a business of your own, might be unrealistic for a number of different reasons, financial or experience or whatever. I don't think that should really discourage you. I think identifying amazing opportunities and jumping on board can be just as exciting. It requires a lot less stress than founding your own company, and still can be super lucrative for you if you pick the right ones. You still get to choose where you work, and some of the same thinking can go a long way, whichever path your career takes. So this is sort of my proposition to you, is to kind of think like an investor, and this is something I think I subconsciously have done for a really long time. Use your career as your opportunity to jump aboard rocket ship, and you'll be guaranteed to have a really exciting one. I do, before we get too much into this part of my talk, I need to preface this by saying I'm probably the least risk-averse person you'll ever meet in your life. I'm not scared to make big bets. Like I said, I moved 3,000 kilometers twice for Uber at the drop of a hat. But I think thinking in this way earlier on in your career will allow you to get really comfortable with what typically would look like a risky investment of time or money earlier or later on in your career. So the earlier you start thinking this way, the better. I'm a big poker player. As they say in poker, it's like scared money never wins. You do have to have some sort of tolerance for risk. So if we're looking at careers as investors, how does that change the way we look at it? You may not have the millions that an investor does, but you do have your time, and you should invest it no differently than money, in my opinion. I'm going to repeat that. You may not have the millions, but you do have your time, and you should invest it no differently than a seasoned investor. I think invest it where you believe you'll get the highest return. That doesn't mean it has to be strictly monetary. It could be experience, skill-driven, the people that you get to work with, who are sort of you've admired for a long time. Look forward sort of a year or two and consider percentage growth at that company in its given history. And for companies that have a bit more history, I think look at the market size and competition. If a company's already big, a $1 million company, $10 million company, $100 million company, doesn't really matter. I think looking at the total market size of something and thinking about how big this thing could become. I still think that Uber will probably be a 10 times bigger company. And a lot of people don't agree with me on that, but I believe that, and I'm willing to, I made a bet with it earlier because I believe that. And so, it's percentage growth. A $10 million company, do I think it could become a $100 million company? Or do I think there's no possible chance of that? $100 million company become a $1 billion company, same percentage growth. It's important to sort of think that way. This is one that a lot of people miss, I'd say. So I'll just give you a second to read this quote. You can't make money with consensus accurate prediction. Bill Gurley of Benchmark Capital, if you're in the startup world, is a very iconic figure. I could kind of yammer on a bunch of investing principles for a long time, but I think in reality I've only ever had interest in studying the guys that I think do really, really well. And so Bill Gurley is considered to be one of Silicon Valley's top deal makers. His firms cut checks into companies like eBay, Snapchat, Instagram, Zipcar, Zendesk, Yelp, Uber, Twitter, Zillow, OpenTable. He's incredibly well respected in the scene. But ironically, this quote is often attributed as Bill's original thinking, and it's not. It actually originates from a 1993 memo from someone that I studied quite closely. And it's a much older school investor named Howard Marks. This gets a little less interesting, but Howard S. Marks, he's like 70 years old. He's the founder of a company called Oak Tree Capital Management, but why you should listen to him is he manages $84 billion a year. People will often go on about what they think is the best company today. You'll hear it in the news. They're informed sort of by someone else typically. It's the news, it's a friend, it's based off a funding round. I've even listed off a number myself that, I might be completely wrong. But I think, for you guys, it's going to be up to you to identify your own opportunities, the ones that you have a unique insight into. But I'd really encourage you to not listen to the noise, the lemmings, the hype. Evaluate companies in your own way and in a way that you feel comfortable. The reality is, most people won't share your same opinion, and that's okay. That's probably actually a good thing. I'll get into that. When I remember when I first joined Uber, this taxi app on your phone that's in like 5 cities back then. Most of my friends thought I was an idiot. I'm like, this could be $1 billion company. They're like, you're crazy. But I just sort of stuck to my guns, and I had it in my head that this is a massive opportunity. So walking through sort of what's outlined here by Marx, it sort of looks like this when you put it on a table. And so basically, and this is shared by a lot of investors. Peter Thiel says, good ideas often look kind of silly at first or ridiculous even. A Twitter, the first day, a Facebook. There's a company called Dog Vacay right now that I think just raised $50 million. It's huge. Sounds ridiculous to most people still. It's Airbnb for dog sitters. It sounds nuts, but it's a huge market. And so you sort of have to remove your sort of subjectivity and think about things objectively. So let's walk through the table. Kind of in the top left corner, if you follow the crowd, or consensus is how they define it in the fund finance world, and you're right, you're not going to be making a big bet, and thus your payout won't be big. Everybody thinks the same way you do. It means joining a Facebook or Google or even an Uber today. Everyone thinks it's a good idea. It's not going to be a big. You're not likely to experience a big period of growth. So say you follow the crowd or consensus and you're wrong. So bottom left quadrant, you're getting some average results again. Typically, if the crowd is all in the same spot and you don't do well, the sort of laws of average will prop you up a bit. But if you go against the crowd and you're wrong, bottom right is probably the worst spot to be. You're going to be looking at a pretty dismal outcome. But if you go against the crowd and you're right, bingo, that's where the big returns are made. That's where the huge companies are built. That's where you can really make it big. Every 100, 1,000, 10,000 X return that has ever happened has fallen into that category at some point in time. Eventually people catch up and they're like, oh yeah, Uber's super cool, or oh yeah, Facebook's great, after it's big. But beforehand, it's typically not the case. And so back to our boy Howard here. It's not easy going against the grain, but when it goes right, it's a complete game changer. And sort of final quotes. I think leave the predictions to the analysts and to the journalists. They're rarely right, and they typically won't help you make the big bucks. So it's kind of all I've got here, and then wanted to leave a lot of time for Q&A because I suspect people are going to want to grill me on Uber after last week. Thank you. Any questions? Maybe not. This is sweet. I'm going to get off the hook.
You said that Uber is going to be bigger, right? Why are you not there anymore?
Yeah, sure. Good question. So I think me leaving Uber was a really good career hedge for me. And now I have a lot more seniority, which is really what I was looking for. I'm a pretty young guy, but I really want to sort of put the stuff that I've learned at Uber to use. And then the other piece is, and this is, again, it's really hard when you're in a company that's growing extremely fast and really fun, and literally all my best friends still work at Uber for the most part. Although after weeks like last week, I'm glad I'm not there some days, because it can be stressful. The upside for me is in stock options, in which I was able to scoop up the majority of mine, and so in a short period of time, and so that's kind of it. It's not in salary. But
if you were a young person starting your career right now, you're saying that you should stake your career on something that's somewhere where software has yet to go. If you were a young person right now, if you were starting your career right now, what would you go for?
Yeah, and I think the other thing is it doesn't have to be necessarily something where it's never gone before, but something where it could be done better. I mean, Google wasn't the first search engine, Facebook wasn't the first social network, etc. Where would I go? I mean, I think it's a really unique question, and I hate to give you like a fluffy answer, but I think go to where you have like a unique insight and something that other people don't have. So whether it's like something you're really into or passionate about, I know that sounds really fluffy, but those are the places where you're going to believe something that the majority of people don't believe. And again, that ties back to the sort of the investing principle where those are the places where you're going to make higher returns because everyone thinks you're crazy for doing it. Probably the best answer I could do.
Can you explain that table again?
Yeah.
Consensus again?
Yeah, for sure.
Like market consensus or something else?
Yeah, market consensus is probably the right way to put it. And it's kind of, market can mean both the investor community, the customer base, et cetera, et cetera, et cetera. It's sort of, and you want me to walk through it like actually?
I can remember maybe an example of a company.
Yeah, sure. So top left, so consensus accurate. So everyone, so consensus just means basically the crowd agrees that this is a good thing. Consensus, like, that everyone has the same opinion. So consensus accurate is like literally a Facebook. You know, great company, oh my God, everybody, Instagram, Snapchat, everybody uses it, it's a great idea, et cetera, et cetera, et cetera. Consensus inaccurate is a MySpace probably. So everyone thought it was a good idea for a long time and then it just crashed because something else came in really, really fast. Consensus inaccurate, I'm gonna throw something under the bus right now. Friendster, yeah.
Hello.
Yeah, not necessarily. I mean, because we don't know if it crashed or not. But I don't love it personally, but I don't know. I'm trying to think of, like, there's a lot of like .com examples of this stuff. You know, that basically no one thought to be, oh, maybe color, great example, right there. Except maybe that's consensus inaccurate, never mind. Basically any startup that couldn't raise money that didn't make it is consensus inaccurate, right? Because it's the worst outcome that could possibly happen. And then non-consensus accurate, I would say, is tons of the big tech companies today and Amazon where they're like, we're going to sell books online. You're crazy. That's insane. That sounds like the most boring thing ever. And yet it became the biggest bookstore in the world and one of the biggest retailers in the world now. Anybody else?
So with this slide here, what's the message here? That the outliers are going to make tomorrow, or is it that?
Yeah, I think so. Yeah, it's that, and outliers are where you have the best opportunity to sort of make some major gains.
So, but your talk is really about positioning yourself in the industry, right? So, what's the connect between finding your position in the industry, or hopping on your rocket, as you say, and actually positioning yourself in the above average?
Sure.
Here?
So I think you got to have your own opinion. Don't necessarily jump on the rocket that you tell me to jump on. I should be jumping on the rocket that I genuinely believe is a rocket,
In other words,
and that the rest of this room might say is you're freaking crazy.
okay, so in other words, go with your intuition and with your passion.
Yeah, and I think do some research. I mean, it shouldn't be purely intuition. It's do some research. Be like, I know the dog sitting market better than anyone else. I don't have a dog, but I'm sure someone else is like, man, I make $50K a year from dog sitting, and I have no clue of that fact. And so go to places where you have sort of an advantage, less bias than. Anybody else? Cool. Thank you very much.